Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand, Forex and gold fundamental and technical analysis. If you're new, a warm welcome to you, and if you are returning, an equally warm welcome to you. And don't forget to please like, subscribe and share. Press the like button and subscribe button if you find the content that I provide every week useful, and keep supporting the channel and gets this quality content out to the guys that really need it. And unlike the vast majority of trading videos and analysis videos you might see out there from YouTubers, my approach is to combine fundamental analysis, which I re-establish value via inflation, interest rates, business cycle, monetary policy, and combine that with technical analysis and employ supply and demand strategies like daily supply and demand zones with capture pain relief and stop hunts, and we use also technical analysis for risk management, trade entry and profit targets. So what we're going to do first before we get onto the fundamentals and technicals is just look at the week ahead and look at what's coming up with regards to any kind of news events and market moving news events. And from on Sunday we've got current account, which is always worth watching, and unemployment rate for the Swiss franc. So that current account was for the Japanese yen, and that has an effect on GDP. Unemployment rate obviously has an effect on GDP as well. So if you have high unemployment, it means you're probably going into a recession. Low unemployment means you're probably growing. So if you're trading any of those pairs, that's worth watching on the Monday. And again, we've got GDP growth rate final. It's expected to come out pretty much as expected as far as the fourth quarter data. No surprises there. Tuesday we've got some, again, GDP growth rate, but it's more to do with the estimate. I think the preliminary has come out as minus 0.6, and when it comes to estimates and finals, then they're really not too far from the preliminary. So again, no surprises there, unless there is a surprise, obviously. But it's pretty much a negative growth for the euro area and employment change. From Australia, we have a consumer confidence change, which is seen by Trading Economics as quite an important news data. So let's see if that does have any kind of effect on Australian dollar price. Wednesday, we've got core inflation for the US, which is definitely going to be watched, as higher inflation would mean that the Fed have to potentially hike rates if inflation does move above their 2% target, which isn't really expected for at least another year or so. But it seems like the bond market is pricing that in, a reflation trade as it's called, and so inflation year on year is definitely going to be watched. You also have Bank of Canada interest rate decision. They're expected to hold. So again, anything other than that is a definite trade in my book, because it would wrong foot the market. Thursday we have probably some, trying to see, press conference that would definitely be watched. The press conference and ECB rate decision, that's definitely going to be watched as well. It's expected. Anything out of the unexpected, anything that comes out unexpected is definitely to be traded, because I think the market is pricing in, obviously, the consensus is that there's going to be no change, and if there is a change, then the market has to reprice the value of the euro. That's really how to, if you are trading the news and looking for news trades, it's really trading the unexpected rather than the expected. So, and then we've got the press conference after that, so that would definitely give forward guidance to the what the ECB are thinking regarding inflation and monetary policy. And then Friday we've got industrial output for the pound, I guess, for Europe, Canada unemployment, part-time employment change. So that's going to be important for Canada is employment. And then we've got PPI month for month, Yeah, I think budgets, but nothing really too market moving. I think the U.S. economy is going in the right direction, and I'll get into that as we go into now the technicals. So, looking at the Dow Jones Dollar Index, and the Dow Jones Dollar Index is just a measure of dollar strength against other currencies like the euro, the pound, the yen, and some others. Now, technically, we did see prices go through these supply zones. And I say this, continuously, and I will continue to say this, is that there is no technical analysis level that will stand in the way of fundamentals and risk sentiment, because technicals are just a level, just technical analysis. But the financial institutions, they make their decisions on whether they should buy or sell based off of liquidity, which is one fundamental analysis, which is understanding and determining the value of a currency or an asset, and obviously risk sentiment. So I was saying last week fundamentally that I wanted to be a buyer, and I've been saying it, matter of fact, for a long time. And traders will generally say, oh yeah, right, but I found a post which is the 27th of January 2021, which is timestamped, and I said to the private members in our Discord group, I've been reading a few articles, and it seems to be a bit of a shift between buying euros and selling dollars in the short term. It looks like Europe is lagging behind the US in terms of vaccine rollout, therefore projections for GDP will also lag. So for the short term, right, and the short term is 1 to 3 month period, I am looking to see if there are buying opportunities for the dollar as long as data supports my bias, which it has been since the 27th of January. So the data to look for is growing GDP for dollar and lagging for the euro. The ECB are potentially being forced to do something about the unwanted strength of the euro, and then please go to our Eurozone channel, news channel, for that, which means that they have to find a way to weaken the euro. The Fed has been winning the currency war over the past 6 months, but that is now translating into potential growth for the US economy. So again, any positive GDP and inflation news supports from the US supports a dollar buy bias for the short term, again 1 to 3 month period. And I said that I would cover this in the evening call, which we have every Wednesday. So I was looking at obviously the data just like everyone else, and again making my predictions, which makes it easier on a price chart to then just look for buy trades, which I was doing. And again on Friday, supportive data, US jobs growth surges past estimates, unemployment dips to 6.2%. So again, that supports economic growth, which is why we were long dollar. And this was an article that I was in last week's video on the published on the 25th of February. Why the dollar is more robust than it looks. The US will probably grow faster than the rest of the developed world this year, and relative rates expectations will rise. Plus the EM trade is overcrowded. So we were, as in our group anyway, and I can speak for myself, that I was long from the 27th of January, which was right here. This is where I was saying that I was long. So then it's just a case of looking for confluences on the Dow Jones Dollar Index and other dollar crosses to get long. That's all I was doing. I was ignoring supply zones, because I understood that if the dollar is value, right, if it is a bargain down here, and if I'm right about the trade, then all I have to do is look for buy trades. Does that mean I win every single trade? No, but what it does mean is that when I do win, I'm going to maximize my profits and hold on to the trade, and I'm buying low and selling high. That's exactly how trading works. To trade without understanding fundamentals, and to really kind of call yourself a Forex trader, if you don't understand the fundamentals, you're basically just a technical trader. You're not a Forex trader. 95% of these people who are on YouTube are not Forex traders. They're just technical traders. So basically, we understood where the value was and understood that supply zones do not count. We're not worried about supply zones in this sense. So with that being said, again, not financial advice, I'll just tell you what I'm doing and what I've done. I'm looking potentially at just demand zones. I'm going to delete these. Delete that, or move that down there. These are where the demand zones are. So if you do want to be a buyer of the dollar, that doesn't mean the dollar is going to go sky high forever and a day. Of course, there's going to be pullbacks, but generally the path of least resistance should be to the upside for now, unless obviously something changes from a data perspective. For me, that's my bias. If you do want to get short and take advantage potentially of some profit taking and a bit of a pullback on the dollar, then you're looking at sell trades, not on the dollar, on the DXY, but you'd be looking for sell trades on other dollar crosses with this as confluence. So again, you'd use the demand zone as confluence on your dollar cross pairs trade, or you'll be looking at sell trades as the dollar is in actually a nice supply zone here. So looking for any kind of trades on the dollar yen, dollar Swiss, dollar franc, dollar CAD, for example. Anyways, let's move on to the dollar yen. And dollar yen, again, no supply zone that's going to stand in the way of fundamental analysis. So I would probably delete those, as the dollar has been a nice buy against, especially against the safe haven currencies. So what we have here is some demand there. So really nice. If you get in a pullback, if we do get a pullback on the daily, then it's looking for buy trades on a lower time frame to look for at that demand zone. If you are looking for any kind of short trades, maybe there's some sort of risk off environment that comes in, or sentiment, or for example there's really disappointing news out about the dollar, then it is a case of potential looking for some sell trades there if you want to take advantage of that. But for now, I think again the path of least resistance is with the buying the dollar in at least the short term. So let's see what happens with that. Moving on to the dollar Swiss. Again, look at that, really nice trend to the upside. I was actually in this but exited, took some profit and wanted to get back in, but didn't realize, but I was anticipating a bit of a deeper pullback. But the pullback did not happen, unfortunately. So there is some supply here. There is some supply there, and a bit here as well. So those are really the main areas to look for any kind of supply. If you're looking to buy the Swiss franc, that is decent area technically. But for me, again, looking for pullbacks, I think that's a really nice zone to look for any kind of any trades. In fact, I think the top of this area here, and many of the private members group will recognize this zone here as a CPR zone. So actually the top of that zone, that 92 round number, just below that actually is a nice it's a different type of supply zone, or demand zone I should say, and yeah, so for the guys that I'm privately mentoring, that area there is actually really nice, and I'll go over that setup in a private in a private video. So let's just draw some of these demand zones, and yeah, but from a daily demand zone perspective, maybe a deeper pullback might come. That's going to be the area to look for any kind of long trades, and I think these areas are really nice for continued dollar strength. Dollar CAD, the CAD has also been strong, a bit strong as well. Commodity currencies generally do well in a risk on environment. So if you have two strong currencies, what should happen is you should get a ranging market really. Trends tend to happen when you have a strong versus a weak currency, but when you have two strong or two weak currencies, you get a ranging market. You can see what's pretty much happened last week where the market really didn't move anywhere. As strong as the dollar is, you still have to choose it against the right pairs. You have to choose the right pair. Just because the dollar is strong doesn't mean it's going to be strong against every single currency. That doesn't make any sense. So again, if you were in the dollar CAD, probably didn't really see that much price movement. But I do think from a buying perspective, I do like this this demand zone here. I think there's really nice, especially intraday. I think this is a really nice zone if prices can come down to this 125 for a buy. If you're looking for any kind of sell trades, I think this level's been touched several times, so I don't think it's the greatest. I'd probably even say up to the 129s. 129.50 would probably be the preferable area to look for any kind of sell trades, and that might not come within the next, maybe couple weeks, couple months, who knows. So not really interested in trading this pair fundamentally, or technically. There's no real technical setups in the short term. New Zealand dollar, US dollar. So we've again, with some US dollar strength, we've seen lower highs and lower lows. So there is some supply here, and we're bouncing now off of an area that has some confluence of support and resistance, and all support and resistance is past supply and demand zones. But we've got some demand here plus an area of support, and you can see where there's probably been some profit taking. Again, this pair isn't necessarily a favorite of mine or something that I'm focused on, simply because you've got two quite strong currencies. But from a buying the dollar perspective, I think the top area is a really nice zone. This is obviously a nice zone as well, as we made lower highs and lower lows, this area here. But the premium trade, I think, is going to be around the 74 round number, between 74 and 74.50. If I was looking for any kind of short trades, that is really that's a really nice trade setup. But if you think that the New Zealand dollar is a buy, then I would probably say the 70 round number would be the best area to look for any kind of long trades. Although currently now is decent. Now looking to the pound dollar, and the pound has been suffering just a little bit, but not as sentiment has kind of gone off the pound. I think the vaccine trade, which has really driven price this year, and even from last year, the vaccine rollout trade, which has pushed the pound higher, and that's really that's had the expectation that the pound should want to the economy should get back to normal quicker. I think has leveled out a little bit, and I will go into some fundamental news. And it says, having stabilized in February, the UK economy seems certain to contract this quarter as lockdown continues to hit growth. But the fast vaccine rollout should spur recovery, argues Matthew Ryan, senior market analyst at UK fintech eBury, and he basically breaks down why. And he says investors are, however, focusing on the positives, namely the UK's extraordinarily rapid vaccine rollout. This has raised hopes of a return to near normalcy by mid-2021 and lifted the pound to the top of the G10 FX performance tracker so far this year. It is for this reason that we think the UK economy could be set to outperform most of its European counterparts during the remainder of 2021. So again, even in the short term, if we're looking at short-term plays, the pound is probably a buy. Would it be a buy against the dollar? Again, two strong currencies, not necessarily the best pair to trade, but there are I think this area here, this 142 area, is a really nice zone to look for any kind of short trades. From a long trade perspective, you do have a few options currently right now, but with positive sentiment around the dollar, why would you want to really kind of stand in the way of that? Even if prices do go to the upside, it's not necessarily the smartest trade in the world to take. And then you've got the next area down here, which is a decent zone as well, as we've basically led to new highs from this 136.50 area down to the 136. So it's got a few confluences around there as well. So pound dollar is okay. I think better from a short-term perspective and a shorting, but decent for a potential buy. as well. Moving on to the euro dollar, and the euro dollar is really selling off. And again, just understanding why you wouldn't want to be a buyer. There was demand zones here and there was a demand zone there, but why fundamentally would you be buying the euro? Understanding what's going on fundamentally with the dollar at the moment. And I know a lot of traders would have been getting involved in that nice pin bar. Personally, I ended up selling right around here. And again, just for some proof, I did create a video again for the private members group, and the video was dated the 2nd of March, and it was the euro dollar 61.8% Fibonacci CPR setup, where we were looking at short trades. And in this video, this private members video, I do videos pretty much nearly every day, going over some setups. And this was basically the setup to the short side. We were looking at this area here to get short. When I say this area here, what I mean is, go down to a lower time frame, we were looking at, it was this area here right there for a short trade. Not going to go over the trade in this video because again, that's for our private members, but the trade worked out really nice. I got in around here and just added to the trade around here. So again, understanding where we wanted to be sellers, and it's easier to then do your technical analysis just one way and look for these types of trades. And if you're right, this is where you can get those really lovely 5, 10, 15 to 1 type trades. Now going on to the fundamentals, again, 3 days ago, Eurozone on track for double dip recession. COVID-19 lockdowns are dragging the Eurozone into double dip recession, according to the latest survey of European companies. So again, not good news when you consider the divergence between the Europe and the US, and also as well in this article where traders map out a day when central banks finally raised rates. There was an article, and I went over this last week. I went over the top bit anyway. I think it was around here, this first paragraph talking about rate hikes. But US on pole, Europe a non-starter. And this was from the 10th of February. With market-based measures of inflation rising, swap markets are slowly cranking up the pace of expected US rate hikes. Traders are bracing for a first 25 basis point hike in the fourth quarter of 2023, then another 50 basis points over the next 18 months. That's a slower pace than the last hiking cycle suggests. There is room for more to be priced in. That stands in contrast with Europe, where some central bankers continue to dangle the threat of rate cuts, right? So while one is dangling the threat, I guess not even a threat, but the suggestion, while the market is pricing in a potential rate hike, and then you're seeing rate cuts. Again, a divergence in monetary policy. So not least as a means to counter strength in the euro market, pricing suggests that the first European Central Bank won't hike until 2024. So again, everything I was saying, lagging. Yeah, so the euro, as I was saying, is lagging. Yeah, lagging for the euro right there. Yeah, so it's not I'm not a genius or nothing like that. It's just a case of understanding the economics and seeing it play out in price. So going back to the euro dollar, we were short around here, and you're seeing it really play out. Yeah, and that's pretty much what's happened. Going forward, again, there's no demand zone that's going to stand in the way of value and fundamentals. The price doesn't move because of any kind of indicator. It moves because of determined value and divergences in fundamentals. So what we have now is really, for me anyway, some selling opportunities. If we get a decent pullback to the underside, etc., that's going to be a selling opportunity. From a buying perspective, because there are going to be buying opportunities, of course, that would be the nearest demand zone. In fact, it's probably going to be all the way down here, and then you've got another demand zone down here. So there are going to be, markets moving waves, so you will get potential pullbacks. And if you do want to take advantage of the pullback, I would probably say look for price to kind of come down into this zone here before looking at any kind of long trades. But for me, it's all about, the path of least resistance, which is, buying the dollar as we have some strong sentiment and supportive data for that. And until that changes, my bias is a euro dollar short. Looking at the euro yen, again, we've had I guess a bit of a supply zone, not necessarily the strongest area of supply, but I think potentially that's a decent buy. The yen and the euro is a tough one to really kind of trade, because we're in kind of risk on sentiment, and I think the fundamentals on the euro yen aren't as clear, and when they're not clear, basically it's a case of stay out. But from a technical analysis perspective, this is a really nice zone to look for long trades. I would wait for prices. If I wanted to get short, I'd have to wait for prices to really kind of come down, prove that there's some supply here, and then look for any kind of short trades in the short term. But fundamentally, not really looking at that currency pair at all. Looking forward to the Australian dollar, US dollar, and again, I think overall the consensus is that the Australian dollar should, outperform the US dollar. But I think in the short term, it's not a trade or a currency that I'm personally interested in, as there are a lot more easier trades out there, and the guys in the private group do know what they are. Now, is there a buying opportunity here? I would say so. Yep. Definitely within this zone of this quite wide zone of demand, but then we have support and resistance zones within that to kind of break down where you probably may want to look for buying opportunities if you think that the Australian dollar is a bargain against the US dollar. Now, if you think the US dollar is a bargain against the Australian dollar, then you're looking for pullbacks into that area there, that 78 round number, or up into this 79.50, 80 cent area is where you'll be looking for any kind of short trades or to buy the US dollar. And I think we should want to enter into a ranging market, so that actually might be a decent sell. Looking at the Australian dollar, Japanese yen, and from a risk on perspective, and I've been saying this for months, we're in a risk on environment, and this is what you see. The Australian dollar, which is a commodity currency, will do well in a risk on environment. Right, so risk on, and the Japanese yen does not do well in a risk on environment. It's a safe haven currency and strengthens when there's a lot of fear, uncertainty, and doubt. So we've had a bit of a pullback, nice buying opportunity here. Personally, I prefer this 81 or 80.93 to 80.64 demand zone. I don't think this has necessarily been the strongest area of demand just yet, because it hasn't made higher highs. Actually made a little micro one, but preferably I would want price to come back down to here before looking at getting long. Doesn't mean that there isn't an opportunity to get here. There definitely is, and if that works out, then brilliant. If it doesn't, then this is definitely going to be my zone to look for any kind of long trades. I think that's going to be a nice bargain, and even better is going to be here. And as long as risk remains on and there is global growth, commodities are, commodity prices are going higher, like oil, copper, iron ore, etc., then the Australian dollar really is the buy. And finally, gold. And gold has not been doing too well, and this is obviously due to dollar strength, the reflation trade, and as well as like bond yield and government bond yields. So gold bulls lose steam for now, as yields trump inflation bets. So there is an argument, I guess, that, I say an argument, but it's a fact that gold is a hedge against inflation. So if inflation rises, that should actually be bullish for gold. But in the interim, what investors are doing are they are probably taking their money out of gold because gold doesn't return a yield, whereas bonds do. And bond is also considered a safe haven asset. So if you were, an investor, would you put your money in a safe haven asset that returns a yield or a safe haven asset that doesn't? And this is why investors, are switching away from haven assets as yield rise, and not necessarily switching away from bonds, but they're probably getting into bonds, but understanding that bonds pay a yield. But what is supportive for I guess gold bullion is that Asian jewelry demand offers support. So I think for the short term, gold is going to have a tough time. It's going to have a tough time, but doesn't mean that it's not a buy. Doesn't mean that you should even short gold. But there's always going to be buyers for gold. So is there an opportunity at the moment? There's always going to be opportunities. For me, I'm not really too keen on the gold trade at the moment, especially with such strong sentiment around the US, a strong US dollar or stronger US dollar, and bond yields rising, 10-year bonds, etc. So gold, I do expect it to kind of go into some sort of ranging market, and when it does, that's probably when I will start to potentially be a buyer. But for now, I think I'm going to not really look too hard at gold from a buying or selling. I need to really kind of see certain things fundamentally maybe pick up. But again, that doesn't mean in the short term that you won't get pullbacks. So if you do want to trade gold and you do want to take advantage of potential dollar strength and gold weakness, that's going to be the first area to look for any kind of sell trades, and this is going to be the next area to look for any kind of sell trades. If you're looking for a buying opportunity, I would probably wait for there to be proof of value. I think anywhere in this zone here, in fact, I think this zone here is actually quite a nice area. It's got some confluence, yeah. It's got some confluence of a major support and resistance where traders would be looking at. So that's quite nice. So you've got resistance, support in this area. So maybe this 16 where we are now, probably down to maybe 1660, maybe actually a decent area to look for some buying opportunities, as maybe a catalyst might be for some wait for maybe some dollar weakness, some dollar news to come out that isn't favorable for the dollar. So that's really, I would say, the play for me for now. If I'm looking to buy gold, I'm never looking to short gold unless really things really start looking fantastic for the economy. But with all the money printing that's been going on, I do think that gold is a buy. It's just all about timing. Anyways, guys, that brings us to the end of the analysis. Please don't forget to like, subscribe, and share. Your comments are always welcome, and I will try and get back to your questions as long as they're worth getting back to. And I will see you in the next video. Take care and have a great trading week.